Are you a swing or position trader who would like to incorporate option trading to increase your probability of profit without spending a lot of time? We recently sent an email to our members showing the trades recommended in our 2 advisory letters over the prior 6 weeks produced over $45,000 of profits. Based on our unique management method using options and the charts, we had a 95% success rate on all of our directional and income trades. This should be a real wake-up call to those option traders that just crunch numbers and who naively believe that chart reading produces no edge. So today I'm going to show you the power of combining MasterTrader technical strategies with our option analysis. I'll walk you through a number of these trades step by step to explain the logic of the trade setup and how you can easily profit with similar trades. Stay tuned. It's MasterTrader.com. I'm Dan Gibby at MasterTrader, and I've been actively trading options for over 25 years because I find them so much easier to produce income than trading stocks. Today I'm going to show you the charts of some of our recent option trades, even one that went against us, to explain our simple approach to trading options. And I'll show you why using charts and time decay overwhelmingly stack the odds in our favor for maximum profit. Okay, let's get started. Buyers and sellers of options each have different goals and expectations of what the underlying is going to do. MasterTrader buys options to capitalize on directional moves when we have multiple time frames in alignment and we're expecting a bigger move. It also gives us limited risk because when you buy options, your maximum loss is whatever you paid for the options. And that also gives us leverage and greater return on our capital. I will show you examples of directional trades. We love selling options because the premium that the buyer pays for them is potential profit to the seller. Time decay means that the erosion of the premium, which is hurting the buyer, is opportunity to the seller. So these are so easy to do for us, and we find high probability credit spreads all the time, which I'm going to show you. This gives us strategies for all market environments. High volatility is a plus because we get more premium when we sell it. We get paid more for the risk we're taking. You don't have to time entries with precisions like you do with stocks or directional moves. MasterTrader trades both of these using the charts and volatility, both to enter and manage. Here's 2 directional trades that we gave our members in the MasterTrader advisory letter. Boeing here, strong uptrend, rising 20, rising 50. It's been on a tear, so it's actually extended here, but this multi-month consolidation into the rising 20, we gave a directional bullish option trade here. So there's many bullish directional option trades that we recommend and also teach, of course, depending upon how bullish you are on this. We actually recommended a bull call debit spread, which gives us a great risk to reward profile because the premium that we take from selling the out of the money call helps finance and lower the cost of our in the money call. Another one here, Home Depot. Same kind of strategy here. But this one's a tad bit different. The consolidation was a little whippier here. So we only became interested with this bearish gap down, closed with a bullish wide range bar back to the high, and then consolidated for 3 days. That's what we call a bullish 1, 2, 3 consolidation. So over the high of this bar, we recommended in our advisory letter a bullish option trade, directional. Everything starts with a pattern. What is the pattern of this mealy stock? It was a breakout from bullish consolidation after a pro gap. So let's back up a little bit. It actually was in a downtrend here. See the declining 20 MA, even though you have the rising 200. But right here you had a bullish professional gap up, filled the gap into resistance. Would we be interested right there? No, absolutely not. It wasn't until this wide range bar closed outside of all of this multi-week consolidation. Then over the high of that bar, we recommended an income, and it could also be a directional trade similar to the prior chart. We recommend selling the Jan 230-210 bull put credit spread, which is selling a 230 put, buying an out-of-the-money 210 put just to limit our margin and risk. We took in 75 cents a share, 39 days of risk. All we're doing when we sell credit spreads is predicting where the stock is not going to go. So we profit 100% of this premium received as long as it closes above this short 230 strike in 39 days. Looking at this pattern, what do you think the odds of that happening are? In our opinion, as chartists, staggeringly high. We went, because the premiums were high, the volatility, we still got paid a lot to go far out of the money, which we refer to as our cushion. So the stock could go over 20% against us, and we still make our maximum 75 cents a share. Once we enter a trade, however, we're in trade management mode. 2 days later, it gets getting just more extended. We didn't expect to move this fast. We just closed it out at 15 cents a share, booking 80% of our maximum gain, eliminating 37 days of additional potential exposure. This one we sold a bear call credit spread in our weekly options trader, which focuses on short-term income trades 10 days or less. We had a wide range breakdown bar, then an inside bar. So that's what we call a bearish 1, 2, 3 continuation breakdown. And although not shown, the weekly and monthly time frames, that's MTF, multiple time frames, were extended. Now this isn't a directional trade. We're just calling a short-term top and getting paid for it through this time decay. We sold the 99-102 bear call spread, which is above resistance, and it was 10 days of risk, took in 34 cents a share, so on a 10 lot, that's $340. It broke down, so we had a nice open gain at that point in time, but no reason to close out. Then another bearish bar engulfing, that looked great. The next day, big topping tail, so now we're like, uh-oh, this isn't breaking down. The next bar, an inside green bar, the next side, a higher low green bar. So over the high of that green bar, we just closed it out. We said this thing's not falling as we expected, so let's close it out. And because of the time decay, which hurts option buyers, and that's profit to us as our weekly and monthly paycheck through time decay, we were able to close this out at break even though the stock went against us. That is unheard of by trading stocks alone. 2 more examples here we gave on the same day. We don't care about the symbol, we're chartists. These were bull put credit spreads on, let's look at one by one. This one, a bullish gap from consolidation on the rising 50-period moving average, minor support. It came down hard, stabilized, bullish engulfing, inside day. See my green line here? That's my minor support gap support, rising 50. When it gapped up here, we sold an out of the money. We sold the $40 put, and then we bought an out of the money put, I think the 35. All we're doing is predicting that based on this pattern and gap, this $40 strike price is going to hold to expiration, and we make our maximum gain. XNet came in hard. We actually sold a bear call credit spread on this gap down day. Climactic sell setup, small bearish island reversal, topping tail, etc. It stabilized, bounced, came back again. So now I have 3 reference points of major support. Over the high of this red bar, we sold this out of the money put, bought another put to make it a bull put credit spread. Just in the last 6 weeks, as I mentioned to you, $45,000. We've had a great run, 95% success rate, batting average on these. We can tell you what to do if you want to be a subscriber to one of our letters, and we will walk you through our rationale on trade setup, trade management, answer your questions, etc. And then you hopefully are participating with our published trades. We have the MasterTrader Advisory Letter, which is very detailed market analysis, trade ideas, income, and directional. You can read our stats on those. And then the MasterTrader weekly options letter that I mentioned, 20 out of 21, over 7 points. So if you trade a 10 lot, that's $7,000. If you trade a 10 lot here, $39,000. Or we can teach you how to do exactly what we do every single day. And that brings us to our MasterTrader 10 module option strategy series course. Phenomenal, comprehensive, easy to follow course. We divided after we give you the necessary introduction, terminology, option pricing. The rest of the course is showing you how to place these directional and income producing strategies exactly like these examples I just showed you. We also teach you how to trade options on gaps, new stocks, a whole separate area on trade and money management, adjustment strategies, which means once you're in the trade, you're in flight mode. You're managing the trade, and we do that through adjustment strategies, trailing pivots, etc. Chapter on psychology, trading plan, bringing it all together. So this is a phenomenal course if you're really serious about wanting to make money trading options and incorporating them into your existing style of trading. We are the ones to help you accomplish that. At $997, it's an incredible bargain. It's one trade in a lifetime, and we're teaching you how to fish, so to speak. But for a special through the end of the year, at checkout, enter this code, and you'll get a $500 savings, plus your first monthly advisory letter you get for free. I say the end of the year, though. We've already sold a good number of these. The coupon is good for the first 50 subscribers. We look forward to your trading journey with MasterTrader. That's all for this video. Be sure to check out the videos on our website further describing our Options Strategy Series course so you can learn how to make money investing and trading in the markets with options with ease. And keep watching the videos here on our channel. We've got a ton of great content to help you learn our simple approach and generate wealth in the markets. Thanks so much for watching. Happy trading, and see you next time.